Hey everyone, welcome to the Amberdata podcast. I'm your host, Chris Martin, joined today with Soups Ranjan. Really excited to have him on here. We're going to talk a lot of things about fraud, about Sardine, and a lot more questions about crypto and his experience. So Soups, thank you so much for joining me.
Absolutely. Pleasure to be here, Chris.
Yeah, so Soups, you have a really interesting background and really excited to have you on here. You were a colleague of mine and somewhat of a mentor at my previous life at Coinbase. You have a really exciting background way before that, from a software engineer to founding several companies. Can you walk us through how this progression worked?
Sure thing. Yeah. So I've been in the Bay Area for about 20 years now. I've worked at a variety of startups. First 5 years was in cybersecurity. Next 5 years, ad click fraud. And then the last 8-10 years has been payment fraud. And throughout my career, I have really just applied data science and machine learning in all these different applications. Most recently, I was heading risk for Coinbase for about 4 years, 2015 to 2019. I was one of the first 15 engineers over there, and ended up heading risk and data science org over there, built a lot of things from the ground up on all things fraud and compliance. And after Coinbase, I went to Revolut to head financial crime for them. And Revolut is where I met my two co-founders, and we decided to start Sardine.
Yeah, that's awesome. Were you into crypto? Did Coinbase get you started in that field, or was that a prior?
Sure, yeah. So it was my first intro to crypto was at Coinbase, right? I got really excited by the concept of Bitcoin. At that time, there was only one cryptocurrency, right? 2015 was Bitcoin. I really got excited by the premise of decentralized cryptocurrency, where parties which don't typically trust each other, they are now being allowed to trust each other via the protocol. But what excited me the most about joining Coinbase was the fact that at a cryptocurrency exchange like Coinbase, you get attacked by the most sophisticated attackers, right? From two kids in a garage to like nation states, and just solving the hard fraud and compliance challenges at a place like Coinbase was was one of the most phenomenal opportunities that I could think of, which is why I ended up joining them.
Yeah, that's awesome. Let's talk about Sardine a bit. Can you give us an overview of what you guys are building?
Sure thing, yeah. So Sardine is essentially a behavior-infused fraud compliance and payments platform. And by behavior, I really mean intrinsic behavior. Like when you're opening an account at a FinTech or financial institution, we look at things like how you type, swipe, scroll, move the mouse, etc. So, for example, if you are opening an account, we look at the speed at which you type your social security number, right? Which would be indicative of whether you actually know it or are you pretending to be me, for example. Similarly, to prevent things like account takeover fraud, we would look at, when somebody is logging into their bank account, how are they holding the phone, right? Because the way you hold the phone would be very different than how I hold your phone, right? So that is the behavior part. Now, what we've done is we've built a foundational layer of device intelligence and behavior biometrics, and then layered in data from about 30 different diverse data providers, from credit bureaus, email, telco data, bank consortium, card blacklist data, etc., which then allows us to catch fraud at different points of a customer journey: account opening, account funding, or usage of a fintech or financial institution issued card, right? So that's our thesis around the fraud and compliance platform. And then we built payments on top of it because we realized that really the cost of moving money is the cost of fraud. And our payments platform is really all about fully indemnified payments, right? So we take on the fraud risk when you are loading money into a digital wallet via ACH or via cards, right?
Yeah, that's interesting. So you're sort of tracking behaviors from the very start to the very end of that journey where, you start from setting up an account and ending at making a transaction. Is that right?
Yep, that's right. Yeah. So, but one of the ways of looking at it is that traditionally KYC systems have been a one-time relationship, like a one-night stand, right? So therefore, if you are using a stolen credential at a financial institution, the FI has no idea whether that credential was actually stolen, right? Because KYC system is really a one-time relationship. But what Sardine does is that we make it a long-term relationship because we've combined KYC with subsequent transaction monitoring. So we continuously monitor, what is the consumer doing after using this particular KYC credential, right? How are they behaving? What type of payment methods are they adding? How are they transacting on the platform? And typically what happens is that if I stole your KYC, someone else's bank account, right, and created a synthetic identity, then the person whose bank account was stolen will come back and file a chargeback or a return, right? So that is how we will learn.
I see. And those chargebacks, are those guaranteed or supported by Sardine?
Yep, that's right. So we have fully indemnified payments, right? So we take care of number one, detecting potential fraudulent transfers, and then if there is a return, then we indemnify. Right.
Yeah, that makes sense. Who are the primary customers for Sardine? As in, what types of customers are using?
Sure. Yeah. So we power about 250 plus fintechs, gift card companies, financial institutions such as banks, crypto exchanges, some of the largest crypto exchanges worldwide, NFT platforms, some of the largest payment processors. So yeah, pretty diverse.
Oh, that's awesome. Yeah, I've been following you guys on LinkedIn. Love your posts. You post almost every single day with something insightful, and I learn a lot about fraud through those. It seems like you guys are doing quite a lot of stuff. You're always launching new products or features. It's really interesting to see. Now, did you know the direction that you were heading in with Sardine at the start? Or is there just so much green pasture that you're moving very quickly throughout it all?
No. Everything was pre-calculated. Yeah. So what you would call us doing a lot is essentially us doing really one thing, which is really, our pitches. It is fraud and compliance in one platform, one API and one contract, right? So if you remember, Chris, so when you and I, we were working at Coinbase, I was managing about 30 different data providers, right? All the contracts, all the data integrations, combining all of that into a fraud risk scoring, right? So you could argue that, everyone has to do all those things. So it's actually every fintech entrepreneur ends up having to go through the same motion, right? So what we wanted to do was we said, hey, fintech entrepreneurs or the fintech product teams, you don't have to worry about fraud and compliance at all, right? Let us do the heavy lift. Let us take care of it all for you. And so we simplify all of that in one platform, one API, one contract, right?
Yeah, that makes sense. And I'm guessing a lot of the big challenges that fintech companies face, they're pretty much all of the same problems, right?
Yep, exactly.
Interesting. And when you help support these companies that are onboarding with you, do you help them also with fraud and compliance programs, or is it mainly payment risks focus?
Yeah, so we don't help them with the policies, right? So they have to write the policies themselves, but we help them with what you would call procedures, right? So we would essentially provide them a full CIP, consumer or customer identification program, which involves SSN checks, detecting synthetic identities. We would do sanction screening and negative news screening. And then we also, in cases where required, we'll step up the consumer into a documentary KYC. And we just recently launched our KYB product as well, Know Your Business, right? So when a financial institution, bank, fintech, they come to us, so we provide them the full KYC, KYB suite, but we also add our secret sauce of behavior infused fraud prevention. So one factoid I wanted to share here, and you would remember this, Chris, that 90% of chargebacks that you get at a financial institution or a fintech typically come from fully verified identities, right? So you would have a KYC on file, you know the SSN, you have a documentary KYC on file as well. And the big missing piece here was that you need to actually stop a lot of this identity fraud up front, right? And that is where we come in with our behavior signals, like how fast are you typing? Are you like hesitating while typing? Are you context switching a lot? Are you, moving the mouse in a very narrow area, indicative of, or you're familiar with the website, right? So via all those signals, we're able to, in several cases, reduce fraud rates by 3x, or vice versa, increase conversion rates by 2x.
Interesting. And I know from my very rudimentary fraud programs is that adding friction also seems to help prevent fraud, right? As these common fraudsters are sort of weighing the opportunity cost of doing more work for a single chargeback or for a single payment. Curious to get your thoughts, when building out some type of fraud system, how much friction is too much friction? Is there ever too much friction?
Yeah, there's of course, there is too much friction, but a best risk management program will be one which balances or has a good trade-off of fraud with friction, right? So, for example, I don't believe in binary systems, right? Systems where you either accept a customer or reject a customer, because then the cost of a false positive is very high, right? So if I declined you from opening up an account, I would actually never know the ground truth. I would really never know that, if my decision was wrong, if I wrongly declined you, right? Whereas what we believe in is that based on a machine learned fraud score that Sardine provides, we allow folks who are in the risky area or the risky fraud score area to still open an account, and we give them some deposit limit, some buying power, right? And then you monitor them over time. And if you don't get any chargebacks, then you continuously keep increasing their limits. If you get a chargeback, then you decline, then you ban them from the platform.
I see. Yeah, that makes sense. So you're slowly increasing the amount of power they have in a way.
Exactly. Yeah.
So speaking more about the platform, I'm curious to get your thoughts on how automation and AI is changing that landscape a bit. I know from previous compliance programs that I've supported, there are a ton of manual processes, right? You have platforms like LexisNexis that has inaccurate or very old and outdated data sets, lots of false positives. Are you guys using any automation tools, integrating any AI tools? I know you guys are also building a lot of these tools from your experience. Just getting your thoughts on the landscape.
Yeah, no, absolutely. So yeah, we are a machine learning based company. So officially we are registered as Sardine AI, right? So we use AI machine learning in all aspects of our product. And for example, we give you a machine learned fraud score when you're opening an account, or we give you a machine learned fraud score when you're funding the wallet, right? Or, if I picked up your phone and I'm logging in, we built a machine learning model which looks at, how you hold the phone, like whether I hold the phone is going to be very different than yours. And it's 85% accurate. So not accurate enough to replace passwords, but accurate enough to be a very important fraud signal, because nowadays people carry their entire banks in their pockets, right? So you gotta protect access if I picked up your phone and there's physical theft. So these are just some examples, right? I'm a firm believer in lowering all the manual review work that fraud and compliance teams have to do by essentially using a lot of machine learning upfront, right? So what our thesis always is that let's use machine learning to solve for the fraud and compliance problems, and then only if and when needed, move the users through a manual review queue, right? So we provide a case management platform which has like ability to review users as well. And one of the other factoids that I'll share here is that traditionally 30% of workforce at a bank has been dedicated towards compliance, right? Because the processes over there are very much manual. AML transaction monitoring or anti-money laundering transaction monitoring systems typically at a bank, they're not real time, they're batch driven. So you're going through like batch review processes, right, over periods of time. We believe in real time AML transaction monitoring. In fact, ours might be the only fraud and compliance platform which performs AML within a second of a transaction. So we believe in stopping money laundering proactively rather than allowing it to happen and then going through all the due diligence, right?
Yeah, that makes sense. And the quicker that you stop it, the it saves really the bottom line of any fintech. Now, what are some of the types of frauds that you have seen in most recent times? Are these sort of angles of fraud changing? Are there any new dimensions here? And you know, for users of Amberdata, crypto trading companies, what sort of types of fraud should we be worried about?
Absolutely, yeah. So I'll give you a few examples, like a few which are non-crypto and a few which are crypto specific, right? So the biggest attack vector that we see, fastest growing, is just scams in general. Like scams take the form of social engineering, which takes the form of IRS scams, Zelle refund scams, romance scams, tech support scams, or crypto investment advisor scams. So all of them are essentially social engineering, where somebody is, emailing you, calling you, or they're advertising like fake websites on the web. You're clicking or calling a phone number, believing this is a crypto investment advisor who's going to help you buy crypto. However, instead of the crypto landing in your wallet, it goes in the advisor's wallet, right? Now, what we've seen in these cases, though, is that the attacker or the fraudster is typically coercing the victim over a phone call, or we see that they are actively controlling the victim's screen. They're actually taking control of the screen and they're moving the mouse, etc. Right? Or sometimes they'll blank out the screen and then they'll take all the funds out of the consumer's wallet and send it to themselves. So what we've built at Sardine is a behavior-based fraud prevention solution, which allows us to detect all these telltale signs of remote control. Like we can detect remote screen sharing, we can detect if there's an active call on in session when someone is doing a purchase, or we can detect if someone is taking screenshots or recording the screen while doing a purchase. Oftentimes attackers convince victims to do that so that they can take the screenshots or the recorded screen and then they can send it up the chain of command, because scammers need to be paid as well, right?
I see. And I've been seeing a lot of interesting scams around social engineering, especially like these love scams, right? Or previously known as pig butchering scams, which is a much broader category, right? How would you recommend people avoid these social engineering scams? Is it just like calling them back?
Yeah, so the number one advice I have for anyone who's listening here is do not trust any phone call or any text message that comes your way, because it's very easy nowadays to spoof a phone number, right? In fact, this is a fundamental design flaw in all the internet telephony protocols, where there is no sender verification. There's no way in SMS or SIP, which is the signaling protocol used for voice over IP, etc. There's no way for anyone to verify the sender, right? So, so that's my number one advice. Always hang up and then go to the website of the bank, look up their phone number and call them, right? Instead of believing that the phone came from the bank.
Yeah, these are simple measures, but yeah, it can be annoying in the moment to do it. So I understand how people get somewhat lazy about it, but yeah, these are very important things that I even tell my parents to to do.
Yep.
Now, going back to crypto, how would you recommend users protect themselves while using sexes? Are there any things that you would recommend users of a centralized exchange sex to do?
Oh yeah. So if you're using a centralized exchange, yeah, number one, make sure that you have second factor set up. Most importantly, the second factor should not be a phone number. It should be like a Google Authenticator or Microsoft Authenticator. That's essentially a DOTP protocol product, right? Something which allows you to look up a code and then enter it, right? Because phone numbers can be SIM swapped nowadays very easily. Secondly, I would advise that do not do password sharing across websites that you use. Use a password manager to store all your passwords securely, right? And of course, finally, make sure that you have some sort of step-ups set up in the centralized exchange, where maybe only allow list a particular set of crypto addresses that you want your crypto to be withdrawn to, for example, right? Or have like 2FA a mandatory requirement for any dollar value of withdrawals which exceed a certain dollar limit.
Yeah, definitely. I know when some of the centralized exchanges I used raised my limits, that got me very uncomfortable because I don't want to be sending tens of thousands of dollars to somebody, if I even had that much.
Yeah. Yep.
But so you mentioned SIM swapping. I think we can do a whole hour-long talk about how wild SIM swapping is. But can you give me like a very quick thought on what is it exactly SIM swapping?
Yeah, so SIM swapping is really, again, socially engineered, right? So first I'll start with the premise that when SMS messages were created to be used as a second factor authentication method, the intention was intention was misplaced, right? Like it was misguided. We thought that we are verifying phone numbers, right? Except we needed to be actually verifying actual devices, right? Because a phone number is a soft identifier, and I could take your phone number and I could move it to my device, right? By essentially calling up someone at your telco, claiming that, I'm Chris, I, flushed my phone down the toilet, and now this particular phone number, I want it mapped to a new physical device that I just purchased, right? And if I'm convincing enough, I can convince pretty much any call center operator. And therefore, once the phone number has been moved to my device, now I'm going to start receiving the second factor messages, which usually reach your phone number, right? So therefore, I could go into any bank, any crypto exchange, any FinTech, which is using a phone number as account recovery method, right? And typically, that's the loophole that fraudsters exploit, right? So they go and then they reset the password at your crypto exchange by getting a one-time passcode sent to your phone number. So I have your phone number, so I got that. And now I'm going to go reset all the passwords at all your crypto exchanges, right?
Yep, absolutely. Yeah, and I remember this used to be, or maybe it still is, more prevalent for when individuals travel abroad. They may have their phone with them in a foreign country, and somebody intercepts it or just calls in Verizon and says, "Hey, I'm traveling. I need to reset my SIM card, or I need a new SIM card issued."
Yep.
So these protections that we just talked about for centralized exchanges, do these also apply for DEXs? How would you protect yourself when using a decentralized wallet?
Sure. Yeah. Decentralized wallets is a different ballgame altogether, because you own your private keys, right? And your private key is all your factors, right? First factor as well as the second factor. The more nefarious form of scams and phishing scams and fraud going on in decentralized exchanges of wallets is that of smart contract, malicious smart contracts, right, which are draining your wallet. So I'll first describe the attack, and then I'll describe the protection. The attack is, let's say you get a tweet. It's typically a tweet saying, hey, such and such exchange or such and such protocol is having an airdrop. You think you're gonna get rich. You connect your MetaMask wallet to this random smart contract. And this random smart contract might actually ask for some permissions which you are not even aware that you gave, right? It could be something like unlimited token allowance, as in they can actually do or sign a transaction on your behalf to wipe out the entire balance of that particular token. Or it could be, code which a normal layperson would not be able to read through it, but there could be like Solidity code, which actually is, has some hacks built into it, which without you being aware, it's going to essentially steal off your complete balance, right? Now, how do you go about protecting yourself from it? So it's really hard. It's right now, I would say this is the point of time in Web3 where there's a lot of parallels with the early days of internet, where people were getting phished or scammed in the early days of the internet as well, until HTTPS came along, until VeriSign came along. So in Web3, we need similar VeriSign for Web3, right? Because we don't know which smart contracts to trust today. Now, as a layperson, what you could do is, again, never believe in any get-rich-quick schemes. There's always a catch. So never, ever, give permissions to a random smart contract that you just found on Twitter or the interwebs or some Discord forum. Secondly, I would say, don't keep all your crypto tokens in one wallet, right? Shard it so that if you do get hacked, you don't lose all your savings, right?
Yeah, no, that's a really good good tip. That particular attack that you just mentioned, there's a permit from and transfer to sort of exploit that's being taken advantage of right now, and that's a really interesting one, in which somebody signs a transaction thinking, okay, I'm just verifying that I can use this website, this is my wallet, and essentially hidden way down in the messages that you're actually giving permission to transfer all of your tokens, and this is sort of the scary part about these gasless token transfers, is that that's essentially how they exploit it, is they're taking your signature for future transactions, and there's no gas associated. You don't even have that like approved token, pay the gas fee to approve the token, which is essentially a much safer way to transact, even though it costs money. But yeah, that's a really interesting one that you talked about. When it comes to payments, so traditionally users that want to use a decentralized wallet would have to go through a centralized exchange like Binance or Coinbase to move their funds, right? They would deposit USD into the centralized exchanges, transfer crypto from there to their decentralized wallet. Have you seen a paradigm shift recently with users directly onboarding through a decentralized wallet by any chance?
Yeah, no, absolutely. Yeah, after the FTX debacle, a lot of consumers, rightly so, realize that they should follow the paradigm of not your keys, not your crypto, right? So we saw a big spike in decentralized wallets, like signups, people signing up for MetaMask and others. And we also at Sardine operate a crypto on-ramp business, right? So that's our payments product. We allow folks to purchase crypto in pretty much all the major decentralized wallets out there. So MetaMask, for Ethereum and ERC20s, Brave for Ethereum, Bitcoin, and many other assets, Ledger, the hardware wallet, Exodus, the Bitcoin wallet, etc. So in all these places, you can buy crypto using Sardine. And at that time, when the FTX debacle was happening, we of course saw a huge uptick in activity. And it's a very interesting paradigm shift. It's really, I would say, allowing us to realize the main vision of crypto, which is that you should be able to custody crypto assets yourself. However, the hardest part always had been that there was not an ability to buy crypto right then and there in the wallet, right? You had to go to a centralized exchange like a Coinbase, buy it there, and then move it to this decentralized wallet. But now with on-ramps such as Sardine, we bring that capability right in the wallet.
Yeah, I think that's a huge shift in the way that people will be interacting with DeFi wallets in the future as well. I think that's really awesome to see. What are your thoughts on decentralized identity or DID? Is there anything that that DID can help with when it comes to fraud or even protections?
Decentralized identity has been a concept that all the blockchain enthusiasts have been very excited about, but I haven't seen any meaningful progress over there, to be honest. It's essentially it really comes down to like game theory, right? It's like if I am a centralized exchange, I'm sitting on like tens of millions of verified identities. Number one, I'm not going to think about sharing all of that with my competitors. Number two, it's usually not top of mind for that exchange to offer those identities and put them on the blockchain, et cetera, et cetera. They have to, of course, go and ask the consumers for that permission, et cetera. So you can't really do like a top-down approach. If it does happen, it has to be very much bottoms up. And there have been many efforts. Some faded away. There's some new ones which I've seen come along. I think the promise is there. Whether consumers adopt it with their feet, it still remains to be seen, right?
Yeah, for sure. Do you think that if the time comes where DID is starting to be more prevalently used or accepted, how would Sardine, especially their on ramps, how would that sort of shift happen? Would you be able to implement some DID checks during that payment process, or does that happen completely separately on an on-chain transaction beyond the payment process?
Yeah, no, so absolutely. So the way it'll have to happen, and this is something we are actually thinking about. So because we actually, in our on-ramp business, we do KYC the consumer before we allow them to purchase. And separately, we sell KYC as a service, regardless, right, to crypto exchanges, fintechs, banks, etc. So the way it'll have to happen is that, let's say I KYC'd you at Sardine's on-ramp. Now we would then, store some identifier which states that you are a verified identity, maybe packages Sardine fraud risk score together with it as well, and creates some sort of a cryptographic hash of that and stores it in a wallet, right, in the wallet. And then if now we'll have to we are working with some wallets and think so that wallet, next time somebody wants to reuse it, and by wallet I really mean the wallet would take it and either they store it in the wallet itself, or they actually could store the representation in the blockchain, right? It can be done both ways. And next time you want to use your KYC at another crypto exchange or another fintech or another on-ramp as well, then there has to be some sort of a handoff mechanism, right?
Yeah, that makes sense. Talking about the future here, what does the future for Sardine look like? Do you have any new products or features that you guys are launching I'm sure you want to save that for your own marketing, but you know, just generally speaking, what does the future look like?
Yeah, so Sardine's vision is that the cost of payments is really the cost of fraud and compliance, right? So we want to automate fraud and compliance to such an extent that it goes to near zero. And that's how we want to essentially reduce the cost of payments, right? And also with new modern payment methods, there'll be new types of fraud coming about, like faster payment methods worldwide. They look very similar to crypto, actually, like FedNow when it launches, or RTP, Zelle. All of these have very similar flavors as crypto because money moves instantly. And therefore, with faster payment comes faster fraud, right? So we want to solve for that. So we're working on solving for that. We're also in our payments business, we've so far focused on really just the widget, right? So we give you a widget that you embed in a wallet. We are now actively working on making an API version of it so people can skin it the way they want, or they can build their own UI around the APIs, right? So that'll just enable us to have fully indemnified payments from Sardine, right? Where people can use it to in applications that we haven't even thought about.
Yeah, really exciting. I think that API is a huge value add, especially for like white labeling. It's awesome. Yep. Last question for you, Soups. What is one thing that we in the crypto community aren't talking enough about, something that we should be talking about more?
Absolutely. Yeah. Lots of thoughts there, but I'll only state one. So there is a debate that needs to happen to resolve this trade-off between privacy and security, right? Or in this case, it's really privacy and fraud prevention. Most of the on-ramps, including Sardine, a big portion of the chargebacks that we get are coming from folks who were scammed, right? So for example, you go to buy crypto at, let's say, a wallet like MetaMask, and you thought you're buying the crypto, but before you bought the crypto, you had given unlimited token allowance or this permit transfer method to some random smart contract. So you buy crypto, it comes in one way, but it never stays in your wallet. It is leaky, so it goes out the other door immediately, right? So you as a consumer, then who do you go and do a chargeback against? Did you go and do a chargeback against Sardine, right? But we had nothing to do with it, right? It was basically the consumer had given some permissions to a random contract before us, right? Now, to make the long story short over here, this is actually solvable, right? If Sardine, our behavior biometrics was there in a wallet, right? We would know that you were actually being socially engineered, into giving some random contract some permissions, right? So that's just one example. And of course, our SDK, which looks at all these behavior patterns, it is actually privacy aware. It only looks at things like XYZ coordinates of how you're moving the mouse, or XYZ coordinates of how you're holding the phone, or when you're typing things, we're not looking at the characters you type. We map every character into a random character. In fact, it is PCI compliant, right? So if it can be PCI compliant and it's embedded for card fraud prevention, why can't it be done in crypto wallets, right? However, on the other hand, what we've seen is that all the users of crypto wallets, they are being led to believe that decentralization is everything. You should be in charge of securing your assets yourself, but they cannot be made to believe that, because there are still very, very sophisticated attack vectors which they're falling victim to. So therefore, to make the long story short over here, like there has to be conversation here around privacy versus security, or privacy versus fraud, and there is a good balance to be struck over here. So we are having some progress over here. We're in conversations with some wallets who have expressed interest in solving for it, because they are aware that if you don't solve for it today, as an industry, the crypto wallet industry or the decentralized exchange industry, they're going to lose the trust of the consumers.
Yeah, I love that. That's a really important topic is how do we balance privacy with your own security? There's always that trade-off, right?
Yep. Yep.
Awesome.
Absolutely.
Well, Soups, thank you so much for joining me. That's all the time we have today. Really appreciate you joining us. I learned a lot about personal safety when it comes to my own centralized and decentralized wallets. We learned a lot about Sardine. I'm really excited to see what you guys build out in the future, and all of the new tooling and security measures that we'll have to help the crypto industry as a whole. Yeah, thank you again so much.
Absolutely, Chris. It was a pleasure talking to you, man. Thank you.